carry forwarding the closing balances of previous period to the current period as a consolidation task. So as everyone knows that balance sheet accounts will get carry forwarded to the next period and P&L will be closed. So when we are defining the carry forward functionality, we will define it only for balance sheet accounts because of the accounting treatment. So in order to do the carry forward functionality also, as we discussed the 3 steps, first is dimension maintenance and the related property maintenance. So go to the dimension. When you are carry forwarding it to the next period, the first and foremost dimension we need to check is category dimension. See here there is a property called carry forward source category. If you specifically mention that carry forward, when you are carry forwarding, you want to carry forward only this particular source category, then you have to mention this particularly specifically you have to mention. If you are not specifically mentioning, then you can carry forward any of the data with respect to any of the category for the opening period. And here there is something called opening period, opening year, opening period means when I am carry forwarding it, if you say that this carry forward functionality should start from say 12th month onwards. Suppose if I am going live in 12th month. So in BPC the carry forward functionality will start from opening period is say first month of every year. Then I'll use opening period as 01 and opening year if I specify 2012, then from 2012 onwards only your carry forward functionality will work. So with respect to any of the category, if you want to maintain these values, you can maintain, or if you leave it blank, then you can carry forward any period balances to the next period automatically. There is no restriction in the system. So it is up to you whether you want to maintain these values or you can leave it blank so that the client can work for any particular period or any particular year. And then the next dimension is audit trail, which is very, very important. Here if you see there is a property defined in audit trail that is called copy opening. This is the standard BPC property given by SAP. In this, whatever the data you are trying to carry forward to the next period, you have to specifically mention as Y. Then only the system will carry forward those data to the next period. If you are not choosing any of the audit trail without Y, then the data will not get carry forward. And here if you see, we are putting currency adjustments, equity adjustments and input, leasing, say 4 or 5 items we kept it as Y. That means this, if the data is with these audit trails, it should get carry forward. When we are looking the carry forward functionality, we have to look this particular property also, which is very important. This is called data SRC property, and here we are having 3 things which is standard given by SAP. M is called manual, A is called automatic, and I is called input. So for at any point of time for I, we use I, and M means manual and A means automatic. What is automatic refers to is whenever we are triggering the consolidation related business rules, system automatically posts some entries by the system. Even when you are doing the eliminations, consolidation of investments, So those are called system passed entries. So which you need not carry forward, system automatically carry forwards it to the next period when you close your books of accounts by triggering the consolidation of investment package. So that is why we need to identify those data sources where you are keeping these values in your automatic postings by the BPC system. Suppose if you see here, I kept eliminations A, equity A, and equity minority split A. That means these are the three entries or three data sources I am using for doing my consolidation of investments, and I am giving these three audit trials in the business rule. That is why I am choosing data SRC type as A. When you choose the data SRC type A, it automatically means that you need not select copy opening as Y, because system automatically carry forwards these values with A. And whatever you have chosen as M, manual, and I, input, for those values if you want to carry forward, there should be a property maintained in copy opening as Y. This is a interdependency with respect to these two properties. And these two properties plays a main role when you are carry forwarding it to the next period. So these are the two important dimensions which we need to consider when we are carry forwarding it to the next period, any of our transactions with respect to the balance sheet accounts. And then as we discussed, the second part we need to consider is logic scripts. So go to consolidation. So copy opening is a logic script which I am using to transfer the closing period balances to the opening period balances in the BPC system. Here I have kept this as commented, so I am using this particular rule. Run program copy opening is the program name given by SAP. So these logics you can download it from UJFS, which we have already discussed. And in between part you have to maintain according to your naming convention used for the dimensions. So run program and the different dimensions and the dimension sets, and then end program. Copy opening is the program name which is used for doing the balance carry forward. Then create the DM package. Today the system is too slow. I don't know why the system is stuck up, the Excel part. It is not at all opening. Okay, log into the consolidation system. Okay. So go to the data manager package, organize package list. So yesterday I have shown you once again how to maintain that. So I have already created. So if you want to see what is the package name, modify script, advanced script. There is, this is the file name which I have created, copy opening.lgf. So the same file name I am using, and I have created a thing called BCF. If you want to create by copying, you have to put add package, select, script logic, and then you have something called copy opening or opening balance. This you have to copy and give your name, and then assign the technical name which you have given for the script logic into your particular package. Now close this. So we have created the script logic, and then we have assigned the script logic to the data manager package also. 1 minute. Okay, so open any template. Okay, we'll put some data into closing balance of previous period, and then we'll see by running the balance carry forward functionality into the opening balance of the next period. For that purpose, we'll enter some entries. Okay, here I kept some of the P&L accounts also, just to show you how the P&L accounts will not get affected when we are using this balance carry forward functionality. Save data. Now we have some data that is available in the last period of closing balance. As per the accounting treatment, we need to transfer it as an opening balance in the next period through carry forward functionality. So for those purpose, we have maintained the master data with respect to dimensions and then logic script. The next thing what we need to maintain, we need to maintain the business rule. Go to carry forward business rule. Here we are having, these are the different tabs that are available in order to support our balance carry forward logic. We'll discuss one by one what each thing will do. Source account means what are all the accounts that you want to use it for carry forward functionality. So as we know, only the balance sheet accounts will get carry forward. That is why I have chosen the top node balance sheet. And then when we are carry forwarding, it is always the closing balance will get carry forwarded to the next period, not the intermediate balances. So I have chosen the source flow as balance flow. Here at present I have chosen source audit as input because my data is there in the input, but in live environment, what are all the input areas which you want to carry forward, you can select that. And then destination account. When I'm carry forwarding it to the next period, if I want to carry forward it to a different account, then I have to maintain that account details here. If it is same account, then I can keep it blank so that it will post to the same destination account. Similarly, if you see, when I'm taking the values, I'm taking source flow from balance, that is closing balance accounts. But in destination, I am posting it to a opening balance because carry forward functionality will post the values to opening balance. So in destination flow, I am choosing a different thing because of the requirement. Similarly, when I am sending the data as a opening data, my source audit also should remain the same. That is why I am keeping blank. If you want a different audit, then you can keep here a different audit ID so that whenever it is posting, it will post to a destination flow as opening and then destination audit as a different one which you have chosen. If you are keeping it blank, whatever your selected source, the same will be taken in the destination also. So with respect to the balance carry forward, one is account, another is flow dimension, and another is audit trail. These three are the important fields for carry forwarding it to the next period. So source will have these three tabs, destination will have these three tabs. When you are carry forwarding, you can carry forward it to the same account and same audit. And definitely the flow will be different because it will be here as an opening balance. And then reverse sign. When you are sending the data from source to destination, if you want the data sign to be reversed, suppose if here there is 1000 is there in source and you want to reverse it as -1000, then you have to select this checkbox. System will automatically put negative value, or if there is a negative value, put positive value in the destination data. Because there might be circumstances, I'll give you an example how it will be useful. There might be lot of examples that will be there in accounting treatments, but I'll give one example why we use reverse sign. There is, if your client is having 2 GL accounts for retained earnings, say retained earnings balance sheet might have 2 GL accounts and retained earnings P&L will have 1 GL account. So one retained earnings balance sheet account will be prior period and one retained earnings balance sheet will be for current period profit. So whenever I am getting the current period profit, I will be transferring the P&L profit to balance sheet current year account. But when I am carry forwarding it, I have to transfer it to the prior period account so that my prior period account will have the accumulated profit, and whenever I am having current period profit, it will be stored in my current period, current year retained earnings GL accounts. So some clients will maintain those kind of retained earnings accounts, multiple retained earnings accounts in order to store the accumulated balances and store the current balances. In those cases, when you are clearing the current year retained earnings, you have to put negative value and then post the value to the previous year retained earnings to transfer it as an accumulated profit. So these adjustment entries, if you want to do, you have to use this functionality and then you can reverse it and then post it to the current period. From current period to previous period, you can post it and you can reverse the value which is there in the current period in order to make the current period as 0 value. So these kind of adjustments can be performed through these particular options, reverse signs. I have given only one example. So different accounting treatments will have different examples. So according to our requirement and according to the client requirement, we have to use these options accordingly. And then the next thing is audit type. If you remember, when I am saying here, okay, when I am saying in audit trial, we have three types. One is called data SRC type A, M, and I. M is called manual adjustment, I is called input, A is called automatic postings by SAP. So as we discussed, this part will be taken care by the BPC system. Only these two things we need to define the business rule. All means here these two, not this one. So you have to be very careful when you are choosing the audit type. If you see here, if you double click this, I and M. I is for input, M is for manual journal postings. All means both input as well as manual, not the data SRC type A. Data SRC type A will be automatically taken by BPC system. Dinesh is having a question. Whenever possible, could you emphasize on new functionality compared to 7.5? Dinesh, with respect to consolidation, there is no much changes. Only there is changes with respect to the web GUI. In 7.5, the fields will not be like this. It will be a different screen because that web screen is totally different from BPC-10. That is the difference. But functionality wise, there is no difference. Only in consolidation, here they are calling it as ownership manager, which you will not be able to see it in 7.5, and then controls, monitor and all, which you are not able to see in 7.5 the way it looks in the BPC-10. That is the difference, but functionality wise there is no such difference. Because consolidation across the globe, it remains the same. The options will remain the same, but how to use it depending upon your requirement. And same period. Suppose if I want to transfer the source account to destination account, instead of closing period of previous year to the next period, if I want to transfer it to the same period, then I can use the same period functionality. Apply YTT is not applicable for us because it is applicable only if you are choosing your consolidation model as periodic, but we have chosen as YTD, so this field is not applicable. You can keep any of the remarks which you want to keep. So this is how we will maintain the business rule. Once you maintain it, validate and save the business rule. So now we have completed the 3 required steps. One is dimension property maintenance, second is script logic and data manager creation, third is business rule maintenance, and we have entered some data in order to test the values, carry forwarding it as a, this is the flow dimension and this is the December. If you remember, for our accounting, what we do, we'll close the books of accounts in December and transfer it to the January as a opening balance. Here I am taking Jan to December. If your client is April to March, then take the same thing, April to March period. Then go to the data manager, run package, balance carry forward, actual data is for just today's system is very slow. Okay, currency is local currency. Okay, and where the data is available. To 2015.01. That is the next period. Refresh. Okay, come here and refresh the data. See, the data is getting carry forwarded as opening balance in the flow dimension, and then period it is taking is the next period. And if you see here, till BS accounts are there, the carry forward happened because we have chosen balance sheet accounts only, and for P&L accounts the carry forward functionality will not trigger because of the accounting treatments. Okay. Hari is having a question. There will be many occasions periodic consolidation updates needs to happen to the financials, mainly for planning or reporting reasons. How BPC handles that required? Hari, your question is not clear to me. What is periodic consolidation updates? Can you elaborate? Two more items above that. Sorry. If it is monthly consolidation by client, how YTD helps in this situation? Okay. Hari, whenever you are doing consolidation, first of all, tell me from the accounting perspective, whenever you are doing your balance sheet accounts, whether you will take YTD value or periodic value. Even if I am in the month of say June, when you talk about balance sheet, it is the prerequisite rule of accounting treatment. When I say my balance sheet as of 30th June, that means YTD balance till 30th of June will be considered. Whether you do monthly or whether you do annually or quarterly, half yearly, whatever might be. The basic accounting concept is balance sheet will be reported on a YTD basis. So I did not get your question at all. So whether you do monthly consolidation or quarterly consolidation, it is always on a YTD basis. No, your cash flow is also on YTD basis. How come? If you are, see, your cash flow statement is what? If you are having working capital changes, how you will consider? Whether you will consider the current assets and current liabilities, the working capital changes. So if the working capital changes, you are considering the previous period minus current period as a current period change, then it is a YTD balance till that date only. And where is the question of periodic there? How you will draw your cash flow statement? It is also on a balance sheet account basis. Okay, so this is with respect to the balance carry forward functionality, which we use to carry forward from one period to another period. And why we are taking the last period balance as an opening period in the next period? Because suppose you take an example here. Suppose I am having December 2014, say 100, and January 2015 I might be having 100 as opening balance. And then if I am doing it in March, for March also my opening balance will remain same, and till now whatever is the YTD from Jan to March will become the value for the current period. So whenever I want to do my books of accounts, whether I am doing monthly consolidation or quarterly consolidation, then from the Jan to that particular period, what is the additions during the period will be taken into a separate thing, and whatever is coming from the previous period which will be taken as separate thing. Because even though if your client is doing monthly consolidation, that is for their own books closing purposes they are doing, but reporting, auditing, everything will be done on annual basis. So your annual accounts will be audited and published to the legal authorities. That is why at any point of time when you are doing your annual postings, if I am doing in July, if I say from previous period December balance and then Jan to July balance, I will consider a single amount. then you will lose your flow. What is the current period additions that has happened when I am reporting on a annual basis to the legal authorities. That is why in any system, it is always says last period balance will be carried as opening period, and then current period till date whatever additions will be taken as additions. So when you are reporting your legal authorities, previous year balance will be carried forward, current period additions till December will be added as additions, and then any deletions are there, it will be reported, and then the closing balance will be shown to the legal authorities. Hari, your question is revision forecast happen on periodic consolidation reports. See, when I talk about consolidation, where is the question of forecast? It is always on actual basis. So whatever the actuals are happening on, based on actuals, I am doing the consolidation. So what is the forecast? I am not able to get the revision forecast, because whenever we do consolidation, which is reporting to the legal authority, it is on actual basis. There is no forecasting done on the legal authority reporting. Hari's question is YTD consolidation happens only for one reason, that is stakeholders reporting, statutory reporting. Yeah, the main reason why we do consolidation is to satisfy the legal requirement, and whoever is the part of the shareholders, they are the real owners of the company. For those purposes only. So the main reason why we do the consolidation is for those purposes only. Yeah, Hari, when we started the consolidation, we said that we are using the legal company codes, which is nothing but company codes, as our consolidation entity units. Yeah, Mitesh is having a question. Where do we configure period in BPC? How will the system know December is the last period and January is the first period? Mitesh, in our first class, when we are discussing, we said in the time period, we are mentioning our accounting year. If you remember, we clearly said what is the first month and what is the last month. Here I am taking first month as January and last month as my December month. So based on the master data you are maintaining, system will automatically take. Suppose if you take April as first month, and here the 01 will come, March will come 12. Okay, any other questions? Yeah, tell me, Hari, no problem. Not get your point, Hari. Why we cannot use fiscal year variant? See, every system has its own requirements. You cannot use the same standard system everywhere. Then everyone will ask why ECC cannot provide the consolidation like what we do it in Excel through BPC. So it is, each system has its own requirements. Yeah, since BPC is a separate system, you need to do all the configurations in SAP BPC itself. That is why we are being paid for, no? Because BPC consultant will do the configuration. Otherwise, your normal FI consultant will take and he will implement everything. SAP is very smart in that. They know how to do the marketing. And when they are saying BPC is a reporting tool, still if you want a dashboard, you have to connect to the BPC system and take the data from BPC and do the dashboarding in VO system. They have a capability to incorporate here, but still they are selling it separate tool, even though that is a reporting tool. Any other questions before we move on to the next topic? Okay, so the next thing is called calc account, or we call it as account based calculations in BPC system. The major requirement towards using the account based calculations, most of the cases will be for generating cash flow in the BPC system. So for generating cash flows, generally we use account based calculations. Then how these things will be useful when we are using our chart of accounts? Because as you know, when we are doing our cash flow statements, there might be so many GL accounts, combined value will become one line item in our cash flow statement. Say take a net profit. My net profit means all my expense and income netted figure will become the one line item called net profit. Then add back depreciation and non-cash expenditure. So depreciation might be you are having say 10 GL accounts for different depreciations. So the clubbed value of depreciation accounts will be one line item in my cash flow statement. So when I am putting those kind of logics, I cannot put 10 accounts line item by line item and show it in the cash flow statements. It will not gel with the client requirement. So then what we do the grouping of accounts, and we create some cash flow accounts, and all these GL accounts clubbed value will be posted to that cash flow account. So when I draw my cash flow statement, depending upon the number of line items like 20 or 22 line items, my cash flow statement will be prepared in a proper format. For those purposes, people use account based calculations. For this purpose, the main dimension which we use is account dimension. So because for cash flow, all our cash flow will depend upon account dimension. Like this is the chart of accounts which we are having here, and we are having cash flow accounts we need to create as an account in the BPC system. For example, I have created one cash flow account CF 001, which is called net profit. Like this, you can create whatever the number of accounts that is required for cash flow purposes, 20 or 22 accounts. For my present understanding purposes, I have created one cash flow account, and then I am assigning all my P&L accounts to this cash flow account in order to get the net of income minus expenses value posted to CF001 account. So when I put my reporting template, I use only CF001, which is net profit. That will only be shown in the cash flow reporting, not the all income and expenditure accounts will not be shown. So mainly for reporting requirements and for cash flow reporting requirement, we use this business rule, and we have to map all our GL accounts to our cash flow GL accounts which we create in the BPC system, and these GL accounts will not be part of your hierarchy. If you see here hierarchy, in the hierarchy it is not mentioned anywhere, so this will be outside the hierarchy in order to support our cash flow requirements. That is the only master data we need to maintain in the BPC system. Then comes the logic scripts. For logic scripts, there is something called calc account, which is used to do the account based calculations. Now if you see the top note title also, for running account based calculation for cash flow preparations. That is why this logic has been provided by SAP. Use the program called calc account and put your dimension details and add the program and create a DM package out of that. Data manager, organize package list, data manager. And I am not going to the same thing like add package, copy the package. All those things are similar. For the package name, you can see here, this is called run calc account. That package you have to select and copy and create your own package, which we discussed, and then add modify, advanced, use the naming convention which you have used. I have used calc, ACC, my file name is calc.acc, which I have kept it there. Now go to any of the template and post some values. This will be our calculated value, that is cash flow account. PM save data. Now here there are some income accounts are there, some expense accounts are there. The net of value will be posted to this GL account called cash flow profit account. For those purpose, we need to maintain the business rule. Go to business rule section, go to account based calculations, and here go to edit. Here I have used the ID called CF. You can use 1, 2, 3 also. This is the naming convention which you want to use. This is according to your requirement. You can create the ID. And then this is the description. And when we are creating the rule, this is the source values, these 4 dimensions, and this destination 4 dimensions. So what needs to be captured in what? And then reverse sign when we are posting, if you want the value to be reversed, and source period, source year, if you define here, then it will be applicable only for that particular period and particular year. And there is something called force intco member. That means whenever there is a transaction that is happening between intco, if you want to have a posting also happening in non-intco or I_none or third party transaction also to be posted, then you have to select force non-intco member, then what it will do is it will force an automatic entry into the third party transaction, the same transaction which is happening in the non-intco also, because some clients want to see after eliminating what is my balance sheet and before eliminating what is my balance sheet, if I want to keep my third party balances also into that, then what will be my required value. So what they'll do is they'll put a different audit trail and they'll post that values into this particular account for cash flow purposes. Because for cash flow purposes, what it refers to is, even though it is a third party transaction, it needs to be paid to the company, and if I need to receive, I need to receive from that company. So for my cash flow purposes, whether it is an intercompany or non-intercompany, it doesn't matter. But when you do the consolidation of investment and go to the top node, that is called, say, group level, these payables and receivables will get adjusted. So because of that, my cash flow might be having different values. In order to support that, you can have a forced non-intco member posting also, so that a non-intco member intco transaction will be posted as a non-intco transaction also. And apply YTD will not be applicable for us because we are using YTD only. And then you have levels. Suppose if I am using, say, 4 or 5 line items, that is like cash flow account CF001, 2, 3, 4, like that 20 line items I am using. If there is a interdependency from the previous lines, then you have to specify the levels. So then first that particular transaction will be calculated and then only it will come to the next level. If you are not specifying the levels, if there is an interdependency, system cannot able to calculate and it will throw up errors. Dinesh is having a question, while moving the differences from balance sheet to cash. Dinesh, it is not differences to balance sheet. It is for cash flow statement purposes. It is not difference in the balance sheet. Balance sheet assets and liabilities will always get tallied. So if you want to prepare your cash flow statement, so you know you have to use a direct method of cash flow or an indirect method of cash flow. So how to arrive at a cash flow statement? It's a combination of GL accounts. So that combination you are bringing it into one account purpose. That is for reporting requirement, as I clearly said. It is not the difference between assets and liabilities. So for this purpose, for this CF001 account, I am using only net profit. There might be so many transactions that are happening, like depreciation, working capital changes. So depending upon your requirement, you have to maintain those many accounts and those many respective cash flow accounts. And here what I am taking all my P&L accounts. So for those purpose, at any point of time when we are reporting, we will be reporting on the closing balance. That is why I am taking source flow as closing balance, source audit. We will just see what data is there in the it is stored in input. So we will take the input. And destination also will store it in input only. If you want, you can store it in a different audit trial also. And then we are saying destination account, it is CF001. And destination category is actual, flow is same closing flow, and destination audit is input. And then if we are saying reverse sign, that means the value will get negated and posted. If you are not putting, system will take the same sign. Source period and source year. If you specify only from that particular period and from that particular year only, this particular value will be taken. If you are not specifying, it is not year and period specific. It can be taken for any of the values. And I have already discussed what is forced intco member. and you can maintain levels and then remarks. Then validate and save. Here there is one more thing. Here when I am creating the ID, I used a keyword called CF. This can be anything, 1, 2, 3 or anything, A, B, C, whatever you want to keep, you can keep it. But in this, the main crux is this value, whatever you created as ID, need to be referred in your logic file name. This is very, very important. So close. When you are using your logic script, go to consolidation, calc account. See here, there is a field called calc is equal to CF. If you have created it as ABC, calc is equal to ABC you have to put. This particular coding needs to be given by you. So only this area you need to fill up after you have created your business rule, and then you have to come back and assign that ID here in this particular script logic. Then go ahead and trigger the logic. Go to data manager, run package, calc account, first of all we will see what period the data is there. It is in February 2013. Actual, Australia entity, currency is LC, and time period is this. Come here and put refresh. See, this is income account. This is income, and sales is income. These three are income accounts. So 30 plus 20, 50, 60,000, and clearing account also income. So 62,000 income minus 7,000 plus 9,000, 16,000. Just a minute. 5, 6, 11, 15 only. See these three accounts. Or expenses, and these two. 9 plus 6, 15,000 is my expenses, and income is 62,000. 30 plus 20, 50, 60, 62. 47,000 is my profit. So that profit will be transferred to this particular GL account. Like that, if I am having say 10 depreciation accounts, so combination of all these 10 depreciation accounts will be treated as one cash flow account, say CF002 depreciation. Then in your cash flow statement, if you are using indirect method of doing cash flow statement, what you will do? my net profit, add back depreciation, and plus next line item will be add back non-cash expenditure. You have to select what are all the non-cash expenditure like bad debts, all those things, write-offs happened. So put those GL accounts and keep it as CF003. Like that, you have to identify the GL accounts and then map it to the cash flow accounts for cash flow reporting purposes. For those purposes, we use account-based calculations. So if you have any doubts, please let me know. Okay, if there is no doubt, we'll move on to the next thing. Business rules. So the next business rule is US eliminations. Elimination and adjustments is nothing but consolidation of investments. So before we go for this, we need to understand there are few more things like global definition, methods, method-based multipliers, and then ownership manager, and then we have to maintain the ownership percentages. In that we have to understand PCON, PON, percentage of consolidation, percentage of ownership, those details we need to, then only we can discuss on the elimination and adjustment, which will be our last topic, which is the complex thing that is called consolidation of investment, where we will discuss the purchase method of consolidation. There are other methods of consolidation, but for our class purposes we will discuss one method. So other methods you can develop on your own, like proportionate method of consolidation, equity method of consolidation, leaving during the period or leaving at the end of the period, and if there is a deletion from that particular ownership, how to do this. All those are accounting treatments. So we'll discuss one method of consolidation. So other methods of consolidation also, as we discussed, it will be based on the accounting treatment. You have to follow the rules and you have to fill in the details with respect to the BPC system. So but in order to understand how to go about to create a consolidation of investment by purchase method, we need to understand these three things. Any method, we need to use these functionalities, but we'll take one example of purchase method and we'll discuss all the things. And then the next concept is called US eliminations. This is very simple and this is used mainly to do the elimination postings in the BPC system. And here there is something called elimination and adjustment, where we can do intercompany eliminations and consolidation of investment using a single package. Because for BPC, the intercompany elimination or intercompany investment and share capital elimination, both are part of elimination and adjustments only, and both are part of legal consolidation. Single business rule and single data manager package. So that is why whenever we are working elimination and adjustments, that will be considering your intercompany eliminations as well as your share capital as well as investment eliminations using either purchase method, equity method, whatever method it might be. So if some clients doesn't want to do the consolidation of investments in the BPC system and they want to do it outside the system because they are having certain additional requirements to calculate manually. In those cases, if they want eliminations only to be happening in BPC system, we cannot use this functionality, because in order to do this functionality, we need to develop all these methods, method-based multipliers, ownership manager, which are of more of consolidation of investment related activities. Unless you define, you cannot do the elimination. So for those purposes, if you want to do the elimination postings directly without affecting the consolidation of investments, you can use a thing called US eliminations business rule. In those cases, we'll use US eliminations. Suppose if your client is going for in consolidation of investments, then it is better to go for elimination and adjustments instead of the US eliminations. And the major disadvantage of US eliminations is whenever the elimination postings are happening, it will be happening in an elimination entity and elimination account. This is similar to your control accounts in your FI system. Suppose if you are posting some GRIR account as a control account. Similarly here we will have a elim account which is a control account and elim entity which is a control entity. So in consolidation you will have two concepts. One is elimination entity and one is elimination account. Like similar to your control accounts in FI system, which is mainly used to control your transactions and see whether the control account is zero or not at the closing period in order to know whether my transaction has been properly booked or not. Similarly, these two will be used in consolidation to satisfy whether our eliminations have been properly carried out or not in the BPC system. That is why if you use US eliminations, mandatorily you have to have elimination entity and elimination account. In these, the adjustment postings will happen, and at each entity level, if you see combined with these things, then only you will get your elimination postings completed. For that purpose, we will see what are all the prerequisites. Go to models, dimensions, go to account dimension, there is something called elim account. If you see here, this is the property used for doing US eliminations. So in your GL accounts, you have to identify what are all the intercompany postings, GL accounts. Against that, you have to put one elimination account. This elim account is called elimination account. This elimination account which you are creating here should be part of your account ID. Then only you can use it here. So I'll show you where it will be developed. I have created that as a part of, see, US elim difference is the account which I am using in elim account property. This you can call it whatever is your naming convention, 1000, 1001, 1002, whatever it might be. The naming convention according to your requirement. But that should be a valid ID in your account master data, and it will not form part of your chart of accounts because it is outside your chart of accounts. And then you have to identify what are all the intercompany GL accounts where the intercompany postings are happening. Against those intercompany GL accounts, these things needs to be kept. Okay, so whenever system is posting the receivable and payable adjustments, system will post to the elimination account also. Like your GRIR account, when you receive the goods, it will post to the GRIR, and when you are clearing it, it will reverse the GRIR and it will make the vendor payment when it is going to the payment related thing, transaction. Similarly here, the adjustment postings will happen in elimination account. This is the first important thing which we need to enable. And then, as we said, the next thing is entity. Like elimination account, we need to have one elimination entity. It needs to be defined. Suppose Here I am using CSO, consolidation elimination entity, where the elimination postings will happen. Like elimination account, elimination entity will also be created. This is additional requirement for consolidation purposes, which you will not encounter in FI system, because FI system deals with only one company code. So this elimination entity needs to be defined. See, CSO elimination entity. And then the next step is to maintain that elimination entity in the group or scope dimension. Because when we are doing the eliminations, elimination happens at group level. At individual balance sheet, the receivables will be shown as receivables and payables will be shown as payables. But when it combined and posted at group level, this needs to be eliminated. So at group level, for each of the group, you have to specify what is the elimination entity which takes care about elimination postings. That is why we need to define that elimination entity which we created in entity dimension against each group in our scope dimension. So these three are very important steps in order to do the US elimination. First is elim account, and then assign the elim account to all intco accounts in the elim account property, and then create elim entity, and then assign that elimination entity in the scope dimension with respect to all the groups where the elimination postings will occur. I think system has stuck up. Okay, so these are the master data settings at dimension level which we need to maintain. The next is script logic. Go to consolidation, go to USLM. USLM is the program name which will be used, which you can download it directly from your UJFS transaction code, and then it is called US eliminations. Go to the consolidation, organize, nice package list. You have to create US elimination package. The package name will be IC elimination, will be the package name, which you have to copy, and then you have to assign your logic file name here. US elim is my logic file name. And then go to business rule table, which is very simple for doing the eliminations. Business rule is very simple maintenance. Go to business rule, US eliminations. The elimination ID, US elim, this can be anything. This is a text field like ABC 123, whatever you want to keep, you can keep. My source audit is input I am using for eliminations, and then destination audit ID. When I'm posting, I cannot post it to the same audit trail, because when I want to segregate what my elimination postings with my input data, I need to segregate the data in order to show in the reporting requirements. So at any point of time, for elimination postings, your destination should differ with your source. So you have to specify what is the source values that needs to be included in the elimination, and when it is including, what is the destination audit it need to capture. It is capturing in IC. And here, when you are specifying the destination audit, you have to be very careful. You have to choose only those dimension members of audit trial which is having A, because once you transfer it to the IC, the system is doing the elimination postings. You are not doing the postings. By business rule, system is calculating and creating the elimination postings in elimination entity and elimination account. That is why those are automatic postings by BPC. So when you are using any value of audit trial in destination audit, it should be with data SRC type A. I have used IC. If you see IC, the data SRC type is A. Then only I can use it in that particular field. This is very important thing you need to understand. So your source audit can be anything, but your destination should always be with data SRC type EA. Only those things can be chosen as destination audit. Then validate and save. Go here, open server root folder, input templates, so US elimination. Now if you see here, I am using input and IC as my members to discuss the demo. Why? Because in my business rule I used source as input, and destination postings by SAP will be in destination, it is in IC, that is intercompany eliminations. That is why I am using input and destination audit members here in order to see how the results will look like. And I will take one input file to load the intercompany data. There should be one flat file called US eliminations. See, this is the flat file, and when we are discussing about data load, we discussed how the flat file format should be. This is similar to this dimension members format it needs to maintain. And BS 123 is receivables and 223 is payables. So in Australia entity, China is having 1,20,000 as receivable, and in China it is showing as payable to Australia 1,20,000, and both are belonging to Asia Pacific region. So when I am doing eliminations, it should always be in group currency, which is the particular scope currency, because these eliminations always happens after you have done your currency conversion. Suppose if you are not doing currency conversion and then you are directly bringing the reporting currency from ECC itself, then also the data is available in the reporting currency. That is why, for our understanding purposes, I am taking the currency into USD, because we are treating this as already converted either in BPC or it is converted in ECC directly taking it into the BPC system using directly reporting currency. And then balance flow and audit trail is input, Asia Pacific, and this we are considering it for 2000. We'll just see what is the value I have taken here. Okay, we'll change it to December 2012. Okay, we are taking December 2012 and the currency is US dollars. Scope is S_ Asia Pacific because Australia and China are belonging to Asia Pacific region. Okay, I am loading the data in input. So this is my flat file which I want to load it into the BPC system. Okay, this is the flat file which I am loading into the BPC system. Close. When you are saving, you have to save it as CSV, delimited. It is very, very important. First, upload flat file into BPC server. US eliminations, upload. I am overwriting the existing file and then import the data into BPC. Select the transformation file, flat file upload. Okay. It has completed the data load. Come here and refresh. Now if you see, these are the two transactions I have posted using the flat file. One is Australia entity. It is receivable from China entity, that is I_CN 1,20,000. When it comes to China books, what they will say, for Australian entities it is payable 1,20,000. So both trial balance I have loaded. Since I am taking only two transactions, I have used only two transactions, but in live environment it will always with trial balance these data will be uploaded into the BPC system. But for our understanding purposes, we are taking only one value from one trial balance and one line item from one trial balance, which is respect to intercompany eliminations. And then go to data manager, run package, US eliminations, Australia and China entity, currency is USD, time period is 2014.12. It is done. Come here and refresh. Now this is the transactions it is posting. This is the elimination entity which we discussed, because as I said, like our control account, we are having control entity where the elimination postings happen. So if I see it at my individual trial balance level, my trial balance will get tallied. If I see at a group level, including this elimination entity also into picture, my both receivables and payables will get adjusted, and automatically my trial balance will get tallied. So whenever you want to draw your individual trial balance or group trial balance, it is always in the tallied manner. That is why we use consolidation entity and will not adjust in the direct entity itself. And here I am using I_Australia US elimination difference account. This is the account which we use it as control account. This we are negating, and see how the system passes the entries. And this is the entry and which has been negated using US elim difference account. And this is the adjustment posting. So this payable which is there here, it is writing off in Australia, and receivable it is writing off in here. So these two transactions are getting eliminated in US elim difference account 1,20,000 and plus 1,20,000. So when I draw my US elim difference account, which is my control account, it is always 0 because it is a one positive value and one negative value which it is eliminating in one place receivable and one place payable. And then if you see here BS 223, this is the direct GL postings which is affecting this again through normal GL account. BS 223 1,20,000, there is a 1,20,000 minus, and then BS 123 receivable here and here. So it is eliminating the GL accounts. So when I take my consolidation entity without US elim difference account, system will automatically negate the intercompany receivables and payables account. Then why I am using additionally control account? Because if I am running hundreds of transactions between intercompanies, each transaction wise I cannot go and check whether system is posting correctly or not. At the end of the month, I will see my US elim difference account and see whether there is any balance, either debit or credit is pending. If there is a pending balance, then there is some transactions have not been posted properly, or when you are getting the trial balance data, there is some mismatch entries. Then you have to go ahead and rectify either in ECC system or rectify directly in BPC system posting a manual JV. That has to be taken care either in ECC or in BPC. Those kind of things needs to be controlled. For those purpose we use the control account also in order to identify any differences are there when you do the elimination postings. And if you remove this elimination account, system automatically posts this receivable account in Australia and receivable account in consolidation entity. So when I take report at group level, I'll consider consolidation entity also, so that my at any point of time my group level balance sheet will be negated with receivables and payables. My individual balance sheet or trial balance at Australia level will have receivable of 1,20,000. So this is how your elimination postings happens in the BPC system with respect to consolidations at group level. If you are having any doubts, please let me know. Okay, so we have covered US eliminations, carry forward, account based calculations and currency translation. This, as we said, it will be our last topic. So we are left out with one is journals, another is controls, two very important topics with respect to consolidation. Then our ownership manager, and then we will discuss about ownership manager, methods, method based multipliers, and then consolidation of investments. Those things we will discuss in sequence. So in our next class we will try to discuss on the journals and controls, which are used controls as validations in BPC for consolidation purposes, and journals will be additional journal postings, and what are all the options when you are considering the journals in BPC we will discuss. So if you have any doubts till now, please let me know. Because either journals or controls will take at least 1 hour each, so even if we start now, we will not be able to finish. So that is why we will not continue today with the journals or controls. Yeah, no problem, yeah, Dinesh. With regard to these things, you can touch base with Techie training team. They will be having those things, so they can provide you those details. Client has all reports with EV get EV GTS functions. Do they need to rewrite everything in BPC-10? No, there are certain functionalities which will not be supported in 10. I'll just check whether I have that document or not. Okay, I'll check. There is one small document available for that. Unsupported EV functions in 10. Uh, Once I find out, I will share those things also, because in my another laptop it needs to be there. I'll check that and I'll update you when I'm sending the script logic file. Along with that, I will send those files also. Yeah, no problem, Devakar. Exactly what is that, Dinesh? I did not get you. Divakar, I did not get your question. What is list of transported objects? That means you can transport all the objects in the BPC system. And when we are discussing about transports, we discuss 3 items we cannot transport. You can refer to that class. Only those 3 items we cannot transport. Other things, everything we can transport. Uh, Dinesh, especially running income statement reports. So what is the exact issue you are facing? Even I think in 7.5, when there is concurrency, system will lock the concurrency, locks will happen. Even in 10 it is the same, because towards concurrence issues system behaves like that, same as 7.5. And if you want to know more about, because that is a general topic, if you want to understand more on the concurrency locking, how it works in BPC, if you read through 430, no, I think 420, I'll just check and I'll update you. See, there is a just information page on concurrency locking. Sorry. Yeah. This is just for an information how concurrency happens in BPC system. In 10. It is on 420. Sorry, not in 430, 420. Okay, Dinesh? And Dinesh, with respect to your 7.5 to 10 migration, see, there is a topic called migrating EVDRE templates from 7.5 to 10. So if you go through this, there they have clearly mentioned whether it will support that or not. No, Dinesh, if you are using HANA, the only thing is if you are having huge data, the performance will be benefited. If you are using 10, there is no difference if you use HANA. But only for reporting purposes and calculations and logic triggering purposes, HANA will perform much better. Ganesh, already 410 is generally not applicable for us because 410 is for Microsoft, and 430, 420, 440 already link is available, in that the books are available. No, I don't have link, Ganesh, because it will be with Techie training team. They will create the link and they will create a user ID and password. They will share it with you. I will not be having that link and all. Yeah, you connect with Techie training team. I think they might have already forwarded to everyone, because everyone said that they have already downloaded that books and all. Still 420, 430 are missing. Yesterday I saw somebody. Okay, then I will check with them. No, you will not receive any documents, Divakar. They will send you a link. Okay, Hari, I will check with them. I don't know why you have been missed out, because everyone got that link. If you are not receiving that link, just send a mail to Techie training team. They will forward the link and user ID and password to you. They will generate a user ID and password and they will give you the link to you. No hurry, they cannot provide it in a separate link because they are keeping the repository for so many modules. I think they are handling the classes for 10 or 12 modules. For each module, they kept a separate document folder and space. It will be very difficult to create a separate link and all. I don't know, Hari, whether this is the link. I'll check with them. I'll send a mail so that they will also create a user ID for me and send it. And then I can see that. What are all the things that are available there? Okay, okay, no problem. Yeah, somebody is asking the link, na? Yeah, yeah, even if you give the link, Hari, they cannot able to access because if they have not got the link, they might not got the user ID and password. That won't suffice the requirement. Okay, so this document is showing migrating EV functions to BPC-10, but it is not specifically showing what are all the unsupported functions, but there is a small document on that. I'll check, Dinesh, and I'll let you know. When I'm sending the script logic files, I'll send along with that. Any other questions? So this is the IDs I got it. If any ID is missing from here, can you just share it with me so that I will include those names also here when I'm sending the other documents. Just check if somebody's name is not appearing here. Please send those details. I'll just increase the font. Yeah, Rajiv, I think your mail ID is already there. ca.rajivsingh. Yeah, here it is there 420, 430 BPC tab books. Just check 420, 430. It is clearly available. Okay, no problem. So you got it, Hari, correct? No problem. Any other question? Is it? There is no 440? I have to check. Okay, I will check anyway. There is whether the link is having all the documents or not. Okay. Okay, then we will end up the session and we will meet in our next class. Okay, thank you everyone.